Hello everybody, this is Toni Turner and welcome to the market now as of Friday, April 14th at about 11:30 a.m. Eastern. Well, today Wells Fargo announced earnings beat profit expectations for the first quarter as the lender earned more from higher interest rates. While executives said the U.S. economy is strong but expected to slow in response to tighter monetary policy, and while rate hikes have helped shore up interest income at U.S. lenders in recent quarters, the gains have come with increasing worries that economic storm clouds may get heavier as the Federal Reserve keeps rates higher for longer. So we are going to see how that plays out. We'll have to see that. And now a quick note on the side here. I realize that the sound quality in these sessions has not been perfectly clear. I know it sounds a little echoey. So please know we are working on that and we will have the sound problems fixed soon. But in the meantime, let's go on to three charts that could give us some insight into the week to come. Now we're going to do something different today. You know I believe in looking at long-term charts to get a really more accurate view, if you want to call it that, or sometimes they're almost surprising when you look at them. You go, oh my gosh, now I see what's going on. So I thought we'd do that today. And today we are going to first look at a weekly chart. We usually look at a daily chart of the S&P 500, the SPY. But today we're going to look at a weekly chart, and I think it will help clarify, the pattern will help clarify in our minds where it needs to go to be bullish and what happens if it falls toward a bearish point. So we'll clean this up. Now today when I capture this chart, you can't see it on the side here, but when I captured this chart, the weekly chart of the S&P 500 SPDR, symbol SPY, when I captured the chart, the SPY was trading right over here at $411.71. Now the SPY is still trading above, about 16% above its October lows. Here's the October lows that was made down at 348 or 3480 on the S&P 500 itself. As you know, practically every asset dipped to pretty wild October lows, and then most have rallied back up, and now we're trying to figure out what to do. So the SPY right now is about 16% above those October lows. It really needs to be 20% above to be considered a bullish market, but right now we have to take what we can get. If you look at this chart here, this weekly chart of the SPY, there is a moving average on it, and it is a 12-week moving average. So let's go over and look here. Let's look left on this chart to the March 2020 lows. These were the COVID lows here, guys. These was March 2020. This was COVID. And the market fell down so dramatically when it found out about, and it was also confusing. But then it rallied back up pretty quickly. So we had the lows here down at 218. Then the market started rising in 2020 back above that 12-week moving average and rose in really what was a very orderly, nice and neat uptrend with a little downplay here between the third and fourth quarter of 2021, but climbed right up into the January, this climbed into 2021, so uptrend in 2020, uptrend, here's 2021 starts right here, continued that uptrend up into the highs at the end of the year in 2021, and that was the January 22 high was about 480, so that's an awesome climb. Then it rolled down in January. As we all know, the market started rolling down, but something that's really interesting here, look at how nice and orderly this uptrend was. I don't know that we even appreciated it at the time. Look how nice and orderly this uptrend is. I mean, it actually just walked up that 12-week moving average, except for that quick dip toward the third quarter in 2021. But then notice when it started in the downtrend, and this is so This is so like what happens in uptrends and downtrends. Downtrends, as you can see, are much more volatile. The bulls and bears are duking it out to see who's going to win. The bears are trying to push price down. The bulls are trying to push it up. But in this case, the bears were winning as we fell into a kind of a wild downtrend here in the beginning of 2022. We got to this January high of 40.80. Then it rolled down into the, rolled down, popped up, down to these lows here. This is the October low that everybody had at 348 for the S&P 500. We've talked about that before. Now, from those October lows, it rallied back above the moving average, came into the end of the year here, then, because we know that it climbed to highs in November and December, then came to the end of the year, and rose up to 418 here in February. So the SPY rose to 418. That was the February high. Then now you can see more than ever, more than you can see it on a daily chart. Notice how the SPY here is actually moving in pretty much of a sideways move. It did make a higher here, a higher high in February, but it couldn't keep going, and it fell back down to these lows. Now the lows here are like 380, 370 to 380. These are the lows that you'll want to watch. 370 to 380. And you'll see, now you can see, oh yeah, if it moves up, and if it can move up, here's 420, here's 318, or I'm sorry, 418 right here, where the highs. So if it can move up over, call it 420, and it's very close to that, that will be very, very bullish for the market, and that would be going above 4,200 for the S&P 500 index itself. Then the next level up is 430. That would be even more bullish. So that would mean it's coming out of this horizontal trade here, and then breaking into an uptrend, and that would be very bullish. What if bullish doesn't happen? What if the Fed raises interest rates in May and so forth? What if earnings season isn't that great? Well, then it may head down a little lower. Remember, the banks, the S&P 500 has banks and financials in it. The QQQ does not, and we'll look at that in a few minutes. So now you've got your numbers here. You can put at your elbow. 370 to 380 is support. 420 is breakout time. And so now you know what to look at as we keep going through first quarter earnings season. Just keep those support and resistance levels in mind, and please plan your trades very carefully. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. We look at this every week. As you know, the QQQ represents the top 100 non-financial companies by market capitalization in the NASDAQ stock market. And we're thinking of stocks, those stocks are like Apple, Amazon, Microsoft, Alphabet, Facebook, Netflix, and so forth. So when I captured this chart today, the QQQ was trading at $318.25, trading in a very nice move here above the red line, the 20-day moving average, above the green line, the 50-day moving average, and above its 200-day moving average. Now remember, again, there aren't any banks in this particular index. So that's given it a little extra push. Now the QQQ is trading at about 20% above its October lows, which were back here. The October lows was 254, and we already know that from those October lows that everybody had, the QQQ rallied and fell, rallied up, made higher highs, fell back down, and fell down to the lows around 254, 260. Then finally, at the beginning of the year, which is very bullish, to have a bullish January is a good thing for the market. So then in January 2023, the QQQ started moving up, moved up above the 20-day, up above the 50-day. Then the 20-day rose and crossed above the 50, which is bullish. Then it finally fought its way in a very steep uptrend. It fought its way up through the 20-day moving average, the 200-day, the black line, and rallied up to its February high up here at $313.68. That was February 2nd. So everybody had a February high too, just about. So then from there, it fell back down through. When you see an uptrend that is this, that rises this steeply, you pretty much can bet your duck slippers that it's going to sell off a little bit pretty soon. Maybe not in a day, but it's going to start doing that because traders are going to start taking profits. We also looked at the 14-day RSI here back then and said, okay, that's overbought. We're probably going to get a little pullback here, and we did. So it fell back down to the 2nd of March, down to 290. So it fell down through the moving averages, tried to bounce up, couldn't do it, fell back down to this low here, this March low at 290. So that's our next support line right here. That's below the 200-day and the other moving averages. That is one that we want to keep in mind. So what's the challenge here for the QQQ? If you look at it in a purely technical term, which of course was what it always comes out to anyway, what does the QQQ here need to do to stay bullish or to get even more bullish? Well, it needs to go back and punch through that August high at 335. Right now it's about 318. The August high is at 330. So that's the challenge if the QQQ can do that to remain in an uptrend. Now, if we look down here, we know that support is at the 50-day moving average at 305. So that's a potential support line. Down a little further at the 200-day moving average at about 292. So these are potential support lines here. And I drew a just kind of a trend line here so you could see the movement in it. Again, we're heading into the thickest part of earnings season, so please trade what you see, not what you assume is going to happen. Our final chart today is a chart of the ETF MG Prime Cybersecurity ETF, the HACK. Now, as you all know, I am not, I don't love getting into positions during earnings season. I don't particularly love it, but if I see something that might hold a little potential, I will follow it and see what happens. So today we're looking again at a daily chart of the ETF MG Prime Cybersecurity ETF, the HACK. It has 57 holdings. The top holdings are BAE Systems, Fortinet, CrowdStrike, VeriSign, Checkpoint, and Cisco. So I know you know some of those names. Now, when I captured this chart today, the HACK was trading at $47.67. Now, like most stocks, let's look at the prior high that we can see. Look left on this chart with me. We had a prior high here of the HACK in August, and a lot of stocks and ETFs had highs in August, as you may remember, of 2022. So this prior high here that it has the challenge with is at 335. Okay, so that's the number we want to keep in mind. Now, if we look down here, we can see that from its October lows at 254, it rallied, it fell just like about everything else in the market did during this time period in 2022, the final quarter. Rallied and fell. See what a steep rally that is? When it gets that steep, it's probably going to sell off at least a little bit, which it did. Came back up, then walked sideways along the 50-day moving average like many companies did during this time through December, then fell into the end of the year. And it fell to 258, 260 in December and January. So this right here, this is our support level that's very, very important. One of them at any rate. Then in January, following everything else, it started moving higher. The HACK held this 259, 26, excuse me, I'm saying the wrong numbers here. It made a high in August of 2022 at about 52. Did I say that? Then sank in a volatile downtrend to its October lows at 40.65 down here. Then rallied and danced sideways into the end of the year at 44. So it rallied, danced on its moving averages, and then down here to 44. Then it started up in January and climbed with the rest of the market to its February highs up here at $46.36. So please excuse my prior numbers. I was in the wrong place there. So let's catch up by doing this. Climbed to with the rest of the market to its February highs at $48.36. Then slipped down to the March lows at 44. So again, the HACK did move up through recently in March, from March through its 50 days, its 20-day. Right here, it moved through all of its major moving averages. And again, is now, as I captured this chart, trading at $47.67. So if in the coming week, if the HACK can stay above the 50-day moving average, and that's coming in at $46.63, if it can stay above the 50-day moving average, and if the market behaves reasonably well, I may add a small position to my trading portfolio with my relatively tight stop down here at $45.95. I'm not going to give it a heck of a lot of room. Now, when and if the HACK rises above 48.50, which is right up here, if it can, it may doodle around here in the first of the week, but if it can rise up and over this line at 48.50, this prior resistance, and if it can stay there for 3 closes above 48.50, I will add to my position, and of course by then I will be trailing my stop. So you may want to keep an eye next week on the HACK. Now, as we wade through first quarter earnings season, if you'd like to become a more successful trader, this is the perfect time to check out my trader training programs. You can choose from 10 different online training programs, like our popular flagship product, 7 Steps to Successful Trading. Everybody loves it. Plus, you'll find easy to learn strategies in my programs that show you how to swing trade. Swing trade is a very popular program. How to trade the trend for profits. How to read charts, great for novices. 3 winning setups, a really good one, and one I like right now particularly, how to bottom fish like a pro. So find out how to elevate your trading skill set and increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen, right up here, or easier still, click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is the Market Now.